Welcome to my channel. In this video, I'll be discussing the basic actions you can take on a cryptocurrency exchange. We'll cover topics such as transferring funds among accounts or wallets, and how to trade cryptocurrencies on the spot or derivatives markets. To illustrate these concepts, we'll use Bybit exchange as an example. However, the processes we'll discuss are relatively similar for all centralized exchanges. If you're interested in opening an account on the Bybit exchange, you can find a link in the description to receive bonuses from Bybit. Additionally, my video in the description provides a detailed explanation of the registration and verification process. Let's get started by discussing Bybit accounts. To access them, all you need to do is click on Assets button. Bybit provides different account types, which are sometimes referred to as wallets. In standard account settings, you will be able to view the following accounts: funding, spot, derivatives, and USDC derivatives. The funding account is where your purchase tokens are stored. Additionally, if you want to sell your tokens, you should transfer them to this account. If you are unsure of how to buy or sell tokens, please refer to my previous video where this topic was covered. The link to that video will be included in the description. The spot account is designed for all operations on the spot market. The derivatives, you guessed it, is for financing your derivatives activities. And USDC derivatives are for derivatives only in USDC tokens. Each account is designated for a specific purpose, and the funds within them are kept separate from each other. Therefore, if we wish to purchase cryptocurrency on the spot, we need to first add USDT coins to the spot wallet. To transfer funds, click on the Transfer button. Then select the account from which you want to transfer funds, choose the coin, enter the amount, and confirm the transfer. Once we transferred funds, we can move on to trading. We can see the available balance and start trading. However, when we move on to futures trading, the available balance is 0, since we still need to transfer funds to derivative account. Therefore, it is often necessary to transfer funds between accounts. While this process may seem like a waste of time, it is crucial to ensure proper fund management and to minimize the risk of losses. In summary, Bybit offers multiple wallets to manage your funds, which are isolated from each other to prevent any confusion. Let's explore what spot trading looks like. For the majority of people who enter the cryptocurrency market, start with spot trading. But they soon realize that it is difficult to generate significant profits without making large investments, and therefore, they switch to futures trading. Spot trading should be approached as an investment. Therefore, when purchasing a token of any project, you should be confident that its price will increase in the future. There is a term commonly used among the crypto community called HODL, which stands for Hold On for Dear Life. This is an encouragement for other crypto investors not to sell when prices fall. Also, it acknowledges that novice crypto investors are not skilled enough to profit from short-term trades. HODLing can provide more safety to investors, as they are not exposed to short-term volatility and can avoid the risk of buying high and selling low. However, it's essential to note that the coin that experiences growth is rarity, while falls are more frequent. Before buying any token for HODLing, it is crucial to conduct thorough research and have a clear answer as to why the price of that specific coin will grow. You can watch videos from another channel that successfully covered this topic. The links to these videos are included in the description. Let's take a close look at the spot console. This panel shows that you can buy tokens using only your funds or by adding leverage. However, when it comes to leverage, people usually visit the futures trading section. On the next panel, you can select whether you want to buy or sell. Also, you have several options for executing your order. The first option is a limit order, where the order is executed only when the price reaches a specified amount. For example, if I select 28,000 USDT, my buying request will only be fulfilled when the coin reaches 28,000 USDT. This method is useful if you think that the price will fall and you will be able to buy it at the lowest possible price. For selling, it works in the same way, but you will sell at a higher price. Another option to buy a coin is a market order. Your request will be fulfilled immediately at the current price of the coin. It is suitable when you have established your own strategy, like DCA, which stands for dollar cost averaging. It is the practice of systematically investing equal amounts of money at regular intervals, regardless of the price of an asset. The open and executed positions can be viewed below. So, what are the advantages and disadvantages of futures trading? On the one hand, futures allow you to use credit funds and leverage, which can be up to 100. This means that with $100, you can trade as if you had $10,000, potentially increasing your expected profit. However, this also means that the risk of losses also increases proportionally with leverage. It's worth noting that futures trading is very challenging, and more than 95% of people who use them lose all their funds very quickly. So, don't start trading too soon, especially with funds that are relatively high for you. Many people come to cryptocurrencies with the expectation of achieving quick and substantial earnings without taking into account the systematic and gradual learning of cryptocurrency trading. We have similar functions on the futures panel as in the case of spot trading. However, one significant difference is the presence of two types of futures trading, isolated and cross. Isolated margin and cross margin are two ways to manage your risk when trading with leverage. Isolated margin means that you are only risking the funds you put into a specific trade. So if the trade goes against you, you can only lose the money you put in and not any of your other funds. Cross margin, on the other hand, uses all the funds in your trading account to cover your margin requirements. This means that if one trade goes against you, it can affect your entire account balance and potentially lead to greater losses. In short, isolated margin is a way to limit your risk to a specific trade, while cross margin puts all your funds at risk for all trades. Also, here you can select the leverage for your trades. Remember, the higher the leverage you take, the bigger the potential profit or loss you can incur on your trades. When starting out, it is recommended to trade without leverage or with a minimal leverage like 2 or 3. In futures trading, you have another option to execute your trades, which is called conditional. You need to enter a trigger price that indicates at which exact price your trade will be placed on the list, and the order price that represents the price at which you want to buy or sell crypto. This option is helpful when you want to take a short position at a lower price, and vice versa. If you try to go short with a lower price in the limit option, your order will be placed immediately as if you had used the market option. Below you will see take profit and stop loss options. Take profit and stop loss are two important concepts in trading that are used to manage risk and optimize profits. Take profit refers to the price point at which a trader wants to sell a security to realize a profit. For example, if a trader buys a token at $50 and sets a take profit order at $60, the order will automatically sell the token when it reaches $60, ensuring the trader makes a profit. Stop loss, on the other hand, is the price point at which a trader wants to sell a security to limit potential losses. For example, if a trader buys a token at $50 and sets a stop loss order at $45, the order will automatically sell the token if it drops to $45, limiting the trader's losses. In both cases, take profit and stop loss orders can be set as conditional orders, which means they will only execute if the security reaches a certain price point. These orders can help traders make rational decisions based on predefined rules, removing emotion from the equation and reducing the possibility of human error. After selecting all the necessary trade settings, you can click on the buy/long or sell/short button to open a position. A long position refers to buying an asset with the expectation that its value will increase over time. This means that the trader will profit if the asset's price goes up. On the other hand, a short position refers to selling an asset with the expectation that its value will decrease over time. This means that the trader will profit if the asset's price goes down. So, a long position is a bet on a rising market, while a short position is a bet on a falling market. In summary, while there are potential benefits to futures trading, it's crucial to consider the associated risks carefully. Likewise, spot trading can be a useful method for those waiting for cryptocurrency value to increase, but it's not a reliable source of regular income. Just as an example for future trading, I will show you how to claim some bonuses that require trading volume. I need to make a trade for $1,000. First, I need to select the futures section and the cryptocurrency that I want to trade. Then, I transfer some funds to my account to proceed. In order to achieve a trade volume of $1,000, I will need to place a long position for $500 and then immediately close it. Since I only have $100 in my account, I will need to use leverage. There is all needed information about open trade in the window below. There are two options to close the position. The first option is to use a limit order to close the trade at a specific price. The second option is to close the trade immediately at the current market price. Now we should check the bonus and claim it. Lucky me. Anyway, that's how you can get some bonuses that require volume trade. Let's review the same process in the mobile application. You can find all the required information about your funds in the Assets window. You will see the same wallets and accounts that we previously discussed. To transfer funds, choose Transfer and follow the necessary steps. To trade futures, simply open the Derivatives window. There are two main possibilities to proceed there. The first one is called Charts, where you can look at graphs and conduct all the research you want. The second screen is called Trade, and everything you need to proceed with trading is on that screen. Most of the features should already be familiar to you, but there is one that might be new for you. If you would like to transfer more funds from this window, click on the plus sign. Additionally, to access a list of all available tokens for futures trading, you need to click on the area displaying the name of the crypto pair. To buy crypto on spot, open the trade window. Here you will see all available options to buy crypto tokens, such as spot, margin, and convert. We previously covered the first two options. The third option, convert, allows you to directly trade one crypto token for another. To proceed with buying or selling crypto, simply select your token and everything else you need is on the trade screen. If this video was helpful, please leave a like. If you still have questions, write a comment and I will try to help you. See you in the next video.